on Unplugged this weekend. Of course, you'll see more of that. But I caught up with Naren, the CIO of ICICI Prudential AMC, and he spoke about his take on markets and sectors where he still sees value.
If you want big returns, normally you have to have some panic. Yes. And from that panic level, you can have big returns. I think we are in the phase of normal returns. To expect abnormal returns at this point of time, I don't think, because you need panic for that and you need extremely cheap valuations. Neither do you have panic nor do you have extremely cheap valuations. As I said, you're in the middle in the pendulum. The pendulum will go towards the other positive side, and at that point of time you have to see what to do, but we are exactly in the middle. Clearly what has happened, if you look at the benchmark has such a high weightage in financials. And a number of people don't want to invest in certain financials. So they go and choose some other stocks in the same sector. So you could have some overvalued NBFCs at this point of time, which is clearly the case at this point of time. But over the next 3 years, I think the good quality NBFCs will separate from the weaker quality NBFCs. What I believe is that the best investment decisions are things which you take in bubbles and busts. Okay. So in bubbles, for example, we took a call in 2007 that pharma was very attractive. Yes. And infrastructure stocks were costly. So for almost a year, it was pharmaceutical stocks that underperformed infrastructure stock, but we stuck to our guns. Yes. But between 2007 and 2012, we got huge returns in the pharma stocks that we bought. Similarly, in the bust, if you had looked at you tried your best to collect money, but whatever small caps you bought in 2008 second half, all the way to the election, the kind of returns that they gave in 2009 was phenomenal. The global fixed income market is in a bubble. Yes. And due to global fixed income market being in a bubble, anything which has certainty of cash flows is not cheap. So even in India, there are sectors like banking and infrastructure, which over the next 2 to 3 years have to deliver returns, because those are the stocks where people are scared to buy because there's no guarantee of cash flows at this point of time. So I think I would believe that, sectors, cyclical sectors, have the best opportunity on a 2-year basis, and one has to invest at this point of time when people doubt whether will earnings come, will the capex cycle come, will these sectors ever pick up. These are the questions people ask us, and that is the point of time when you can invest in these sectors.